Welcome to Dave's Daily Crypto Take. Today is Thursday, May 12th, 2022. Let's take a look at today's charts. At number one is a bloodbath. BTC Bitcoin $26,884.35, down 14.99%. Ethereum at number two, $1,819.88, down 23.73%. Tether at number three, 99 cents. USD coin number four, $1. BNB at number five, $232.70, down 26.80%. XRP at number six, 34 cents, down 33.22%. Binance USD number seven, $1. Solana at number eight, $41.96, down 37.94%. Cardano at number nine, 41 cents, 34.85% down. And last, Dogecoin at number 10, 7 cents, 34.26% down. Wow. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So what we got today is extreme fear at 12. Yesterday, extreme fear at 12. Last week was fear at 27. And last month was extreme fear at 20. Let's take a look at our 5 articles today. Article 1 is Coinbase is disrupting disclosure if we go bankrupt. Article 2 is Bitcoin crashing? Here's what you need to know. Article 3, who's looking at a bit gullible now? For years, cryptocurrency fans have boasted of their digital fortunes, but now Bitcoin values have plummeted. Article 4, amid crypto plunge, longtime Bitcoin bull Michael Saylor falls from billionaire ranks. And last but not least, it's a bloodbath. The crypto crash is real. All right, before we get into the articles, just want to say thank you so much for everyone that's been supporting me. I know I've been taking a hiatus, but I've been still looking at the crypto charts and also the news. So I'd like to give a shout out to everyone that's been messaging me, and thank you so much. Catch me on Apple, Spotify, and Google Podcasts, and every YouTube space. Please like, share, and subscribe. All right, let's get into it. Article number 1 is Coinbase's disturbing disclosure if we go bankrupt. Coinbase has caused a stir with a regulatory filing that contained a troubling message. Users could lose their crypto assets if the company goes bankrupt. In a filing with the SEC, Coinbase said that in the event of a bankruptcy, the crypto assets that the company holds in custody for its customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. The mention of bankruptcy quickly triggered chatter about the state of Coinbase after it posted dismissal results. Tuesday, that sent its stock tumbling. Coinbase shares were down another 27% on Wednesday and 85% from their November peak. There is some noise about a disclosure we made in our 10Q today about how we hold crypto assets. CEO Brian Armstrong said in a tweet, "Your funds are safe at Coinbase, just as they've always been. We have no risk of bankruptcy." He said the company added the risk factor in connection with a new SEC accounting bulletin issued this year that advised companies holding cryptocurrencies on behalf of customers to record those assets as liability on their balance sheets. They must also disclose potential risks to investors. Coinbase said it held $256 billion in fiat currency and cryptocurrencies on behalf of customers as of March 31st. Alex Johnson, author of the FinTech Takes newsletter, said the timing of the disclosure was not ideal. There's something jarring about the company disclosing the risk and saying the quiet part out loud, especially given the turbulence in the crypto market right now, he told Protocol. In his Twitter thread, Armstrong also said the company is also updating its user terms for retail customers to clarify that we offer the same protections in a black swan event as those enjoyed the prime and custody customers. Armstrong said the company should have made those disclosures sooner. My deepest apologies and a good learning moment for us as we make future changes. Johnson called it a bizarre lapse. I don't understand how they possibly could have forgotten to do that, but apparently they did, he said. So there you guys have it. Coinbase is disturbing disclosure if we go bankrupt, ... What do you guys think about this article? Comment down below and let me know what you guys think. Article number 2, is Bitcoin crashing? Here's what you need to know. Bitcoin is the best performing asset of the last decade with an annualized rate of return of over 200%, but it hasn't all been unicorns and rainbows. Bitcoin's unprecedented ascent from less than a penny to $69,000 has been marked by numerous price corrections along the way. As of this writing, Bitcoin's price is down more than 50% from its all-time high of 69,000 achieved in November 2021. Many retail investors are now feeling more anxious than the Twitter executive team after Elon Musk's purchase of the company. But Bitcoin hodlers will argue that much of Bitcoin's recent price action is due to broader macroeconomic trends, like inflation and rising interest rates, which have battered the stock market as well. In addition, Bitcoin has gone through far worse corrections than the current one and has always recovered. So is Bitcoin crashing for good, or is this a correction temporary? Here's what you need to know. The history of Bitcoin's crashes. Bitcoin history is filled with volatility. Bitcoin's first crash was in 2011, and it was the biggest one ever. At that time, Bitcoin was in its infancy, and an exchange named Mt. Gox was the main platform selling the cryptocurrency. On a single day, June 19, 2011, Bitcoin's price plummeted 99%, hitting a low of 1 penny after Mt. Gox revealed that criminals hacked into the exchange and stole users' Bitcoins. In April 2013, Bitcoin suffered from another significant correction when the cryptocurrency tumbled over 80% from $266 to $50. Still, Bitcoin largely remained under the radar for most people until 2017. In that year, Bitcoin rose from $900 to nearly $20,000, only to fall 80% around $3,350 by December 2018. So, will Bitcoin recover this time? Well, throughout every crash, you can find countless articles by corporate legacy press declaring Bitcoin a Ponzi scheme and valueless. However, Bitcoin has proven to be the most resilient asset of all time. Throughout its existence, Bitcoin has rebounded from every downturn while expanding its user base to nearly 100 million individuals in less than a decade. With retail and institutional adoption only increasing by the year, there is every reason to believe that Bitcoin will once again rise and set a new all-time high in the future. So, what do you guys think about this article? Is Bitcoin crashing? Here's what you need to know. Comment down below and let me know what you guys think. Article number 3. Who's looking a bit gullible now? For years, cryptocurrency fans have boasted of their digital fortunes, but now Bitcoin values have plummeted. The dress code was baggy shorts and t-shirts when the rich and famous jetted over the Caribbean 2 weeks ago for Crypto Bahamas. The 4-day conference in a luxury resort for leading creators and investors in Bitcoin and other cryptocurrencies featured talks by the spotty computer nerds, such well-known financial luminaries such as Tony Blair and Gisele Bündchen. Actor Orlando Bloom and his pop singer wife, Katy Perry, were among other celebrities who flew in for a private dinner with fellow investors. In between sessions with titles such as Winning and How Crypto Empowers Global Citizens, attendees could attend sunrise yoga and a VIP pool party. The mood was self-congratulatory, but how could it not be? Given that everyone involved in crypto, the controversial digital currencies that exist only online, have spent the past few years being reassured that they are the prophets of the future. They've been riding a wave of hype that has been seen Bitcoin and its all-time high hailed as a revolution that will transform how economies function and governments govern. In the process, some people have made a fortune from a gigantic speculative bubble. But this glitzy celebration in one of this world's most notorious tax havens was just a little ill-timed. Financial analysts predict a crypto winter for Bitcoin and other cryptocurrency rivals such as Ethereum and Solana. Skeptics have often been proved wrong, or at least premature, as the currencies have suffered yet another precipitous crash in value only to recover. Now, some believe that the horrendous slump in the cryptocurrency market could be the one that ends the party for good. A perfect storm of circumstances, not least a looming fall in tech stocks that many fear will turn into a historic crash, has led to predictions that we are about to see another repetition of the fate of the dot-com boom. And cryptocurrencies are slap bang in the firing lane, along with the spin-off fad for the digital art known as NFTs or non-fungible tokens. The crypto bear market, technically a prolonged fall of at least 20% in share of market price, has so far seen Bitcoin, the most popular cryptocurrency, more than half the value since its peak in mid-November. It is now worth an estimated £24,000. Other cryptocurrencies have experienced even worse decline, dropping as much as 80%. The amount of business done by cryptocurrency exchanges, which hold the blockchain ledgers that record transactions, is also dropping heavily. This has happened many times before, only for buyers to purchase the crypto coin in the expectation that its value will recover. And when they pile in, it often does bounce back. This time, however, skeptics say that the trend hasn't been repeated as speculators see less potential for making a fast buck. Rising interest rates around the world are a major part of crypto's problem. The pandemic was a golden time for cryptocurrencies as central banks pushed interest rates down to record levels to boost economies. This low propelled investors to look for assets that provided a healthy rate of return, and many inevitably targeted Bitcoin and its rivals dubbed altcoin. Now that the interest rates are rising, investors are making better returns buying global government bonds, which are less risky than crypto. Meanwhile, rising inflation, up a 30-year high in the UK, has exposed another weakness of cryptocurrency. At the pandemic's height, when fears of galloping inflation were rife, it was hailed as a hedge against it was more than effective than gold. While central banks can print as many banknotes as they like, Bitcoin is designed so that there will be only 21 million coins. There are currently about 19 million in circulation, owned by estimated 1 million people. In fact, cryptocurrencies have recently been falling in value even faster than real currencies such as the pound. Cryptocurrencies have also seen government undermine another half of their perceived strengths, that the system's anonymity protected them from the official interference by regularly finding ways of tracking crypto transactions to discover where the money is going. China has also clamped down heavily on the industry, seeing it as a threat to its sovereignty, while the vast energy output used to mine that coins continues to cast a long overshadow. Some predict that the excitement surrounding cryptocurrency will wear off, laying bare its inadequacies, both as means of exchange that is vulnerable to fluctuations in value and so secretive that many of its users appeal to be criminals. In the past, there's been a healthy supply of investors and bankers with a vested interest in maintaining the cryptocurrency excitement. Crypto speculators largely manufactured the hype over turning digital images into Bitcoin like certificates of ownership, known as NFTs, bidding millions of dollars for pictures that anyone could copy for free. However, the sort of spending cannot last. This week, El Salvador President Nayib Bukele, whose tiny country became the first to make Bitcoin legal tender, unveiled plans for his cryptocurrency city, harnessing the power of a nearby volcano to mine crypto coins. The eccentric leader boasts that he wants it to be a safe haven for Bitcoin investors. If so, he had better start arranging some deals with cut price airlines. His target clientele may not be quite so flush with cash as he hopes. So there you guys have it. What do you guys think about this article? Who's looking a bit gullible now? For years, cryptocurrency fans have boasted of their digital fortunes, but now Bitcoin values have plummeted. Comment down below and let me know what you guys think. All right, before we get into the next round of articles, just want to say thank you so much to everyone. I just want to appreciate all the love that everyone has been giving me. Thank you so much. If you have friends or family that want unbiased news, tell them to catch my way at Dave's Daily Crypto Take on Apple, Spotify, and Google Podcasts. And if in the YouTube space, please like, share, and subscribe. All right, article number 4. Amid crypto plunge, longtime Bitcoin bull Michael Saylor falls from Bitcoin and billionaire ranks. Crypto investors are reeling from the recent market downturn, but few have lost more than Michael Saylor, the tech CEO who staked his company's future on Bitcoin. Saylor, who was worth $1.6 billion at the beginning of March, saw his net worth drop below the $1 billion mark on Wednesday. According to Forbes estimates, his fortune is largely tied up in MicroStrategy stock and Bitcoin, two assets that have tumbled during the recent market sell-off. Shares of software company MicroStrategy, which Saylor co-founded in 1989, are down more than 61% in the last month, including nearly 30% in the last 2 days. Bitcoin, the world's largest cryptocurrency, has fallen 38% since late March when it traded at around $48,000. It has shed over $300 billion in market value since then. Few companies have hitched their wagons to Bitcoin as MicroStrategy has. The software company, which does not provide services in the cryptocurrency sector, has plowed over $4.5 billion into buying Bitcoin at the direction of Saylor. Its CEO, MicroStrategy, held 129,218 Bitcoins on its balance sheet as of March 31st. The mega bet is now underwater. MicroStrategy's average purchase price for Bitcoin was $30,700 per token. The cryptocurrency now is trading around $29,700 as of 4 p.m. Eastern Standard Time. MicroStrategy previously reported at $170.1 million impairment charge on its Bitcoin holdings for its first quarter of 2022. MicroStrategy took out $205 million loan in late March to finance another round of Bitcoin buying at a price of around $48,000 per coin. The loan was backed by MicroStrategy Bitcoin holdings. Saylor took to Twitter yesterday to assuage investors about a possible margin call, saying that MicroStrategy had ample collateral to post if necessary. The value of Saylor's personal Bitcoin holdings has also declined, although his investment is still doing well. Saylor revealed in October 2020 that he had bought 17,732 Bitcoins for an average purchase price of under $10,000 per coin. A member of the Forbes 400 list of richest Americans in 1999, then worth $840 million, the 57-year-old Saylor studied aeronautics at MIT before founding MicroStrategy in 1989. His fortune swelled during the 1990s dot-com boom, but was wiped out in the wake of an accounting scandal in which the Securities and Exchange Commission alleged Saylor and MicroStrategy had materially overstated its revenues and earnings. Civil charges were settled in 2000. Saylor is not the only crypto fortune to plummet amid the market sell-off. Coinbase's stock is down more than 66% in the last month, bruising the net worths of its billionaire founders Brian Armstrong and Fred Ursham. Here is how much some of the crypto's wealthiest billionaires have lost during the recent market sell-off. Changpeng Zhao, Sam Bankman-Fried, Brian Armstrong, Chris Larson, Cameron Winklevoss, Tyler Winklevoss, Chet McCaleb, Fred Ursham, Michael Saylor, Matthew Rozak, and Tim Draper. So there you guys have it. What do you guys think about this article? Amid crypto plunge, longtime Bitcoin bull Michael Saylor falls from billionaire ranks. Comment down below and let me know what you guys think. All right, last but not least, it's a bloodbath. The crypto crash is real. Bitcoin has shed more than half its value and $1 billion stablecoin has imploded, but investors aren't buying that crypto is dead. Volatility is the bread and butter of the cryptocurrency market, but these days it's an absolute shambles as Bitcoin, the largest cryptocurrency that the rest of the crypto market tends to tailgate, keeps plummeting partly because it's heavily correlated to the stock market, also in shambles, and probably because a long-feared crypto time bomb called Terra Luna has just exploded. Crypto is dead, declared columnist Ross Clark, writing in British conservative magazine The Spectator. As it happens in every crash, crypto investors, retail, and institutional coped with memes. Michael Saylor, whose company MicroStrategy is one of the largest holders of Bitcoin, posted a Photoshop meme of himself working at McDonald's. It's over has become another running gag. It's far from a jovial atmosphere, though. The sudden crash has left many investors in shock, and the Luna subreddit is filled with investors airing suicidal thoughts and supporting messages. The Luna Reddit forum is full of suicidal pots, and space may be zero-sum. Dollars in equals dollars out in financial terms, but not human terms. But for those long embedded in the crypto industry, despite appearances, the recent market crash is neither an unexpected turn of events nor a catastrophic end. Crypto has died at least 4 times in the past. An NFT developer tweeted, "What is dead may never die." Since the latest bull run started, seasoned crypto traders have wondered when the bear market would start. After all, ugly crashes, a trip to Goblin Town, as the meme goes, typically follow long periods of upward price actions. Indeed, Bitcoin lost half its value in July last year, plummeting from over $60,000 to under $30,000. Bitcoin briefly traded for just under $30,000 on Wednesday. But a few things make this crash different and arguably more painful. No previous crash has been this much affected by the macro conditions of the traditional markets, for one, and since 2020, the crypto market has also seen an explosion of hyped up and risky projects. In the decentralized finance or DeFi world, such as Terra Luna project, an uncountable number of interchangeable NFT projects. One quotes, "Okay, guys, it seems I just had 90% of my net worth wiped out, which was at peak 43 years of my salary. Got to restart from scratch." The prices of crypto assets such as Bitcoin have a difficult time standing strong when the world is collapsing around them, so the continuing decline certainly is not surprising. Digital assets have always been a bit of a chameleon when it comes to identifying what exactly they are or when they exactly what they mean. But as they've gotten bigger, prices have been more and more tied with the traditional market, financial market indexes like the S&P 500 and Nasdaq. He said. As per Arcane Research report last month, Bitcoin's correlation to the traditional markets hit an all-time high of 0.70, where -1 means it's negatively correlated and 1 is perfectly synced. This is bad news for Bitcoin, often toured and touted as an uncorrelated asset that adds diversification to a portfolio. Because the stocks continue to have a negative outlook according to trader activity in the so-called futures market. It's not just the macroeconomics and conditions, however, and the pain is not being evenly distributed across the whole crypto ecosystem. Outside of Bitcoin, some projects are at risk from being completely wiped out. Over the past weeks, it also added fuel to the flames. UST, a so-called algorithmic stablecoin with a market capitalization of $16 billion that effectively bought its way into relevance, depegged from its normal value of $1, falling as low as 45 cents. The Luna token that props up UST and is meant to absorb its volatility has also crashed dramatically from over $60 to as low as 88 cents today. Many feared a UST bank run could run also violently bring down Bitcoin and the whole market with it, since Luna Guard Foundation, the organization that backs UST, has several Bitcoins of dollars worth of Bitcoins in its reserves ready to sell should the stablecoins peg need urgent defending. Everybody in crypto is hurting right now, and this predictable washout is an unnecessary blow at the wrong time. Fubar, a pseudonymous DeFi and NFT developer, told Motherboard, so it's being taken out much more poorly than, say, Titan was last summer. He said he has enough crypto to be happy if it goes up, enough cash to weather an extended downturn. Despite the spectacle of loss, there isn't much sense of an existential catastrophe, as many in the industry have long anticipated an eventual bear market. The writing was on the wall for many that the market was overextended and this inevitable circumstance would be painful. High top tokens like this current cycle, like SafeMoon and Shiba Inu, two meme coins popular among retail investors, had already lost most of their value from the 2021 peaks. As the prices fall, there perhaps a silver lining in all of this. A bearish price period often seems a boom in protocol development as intention is shifted towards quality code and protocol governance rather than price. And Santiago Santos, an angel investor in DeFi projects, told Motherboard it's a bloodbath as everyone is in survival mode. But unlike in previous big crashes he experienced in 2012, 2014, and 2018, he doesn't feel like there's an existential risk to crypto. Back then, it was only Bitcoin with its limited use case. These days, crypto is driven by smart contract applications that have given rise to DeFi and NFTs. The idea of smart contracts was powerful, but you didn't have much utility yet. Today, we have a thriving market users across NFTs, DeFi, gaming, DAOs, and that's not going away. So there you guys have it. What do you guys think about this? It's a bloodbath. The crypto crash is real. Comment down below and let me know what you guys think. All right, before we head out, let's take a look at the cryptocurrency prices one last time. Bitcoin is at $27,053. Ethereum is at $1,819. Tether is at 99 cents. USD coin, $1. BNB is at $229. XRP, 35 cents. Binance USD, $1. Solana, $42. Cardano at $41 and Dogecoin at 7 cents. All right, so there you guys have it. Thank you so much for making this far into the Crypto Take YouTube channel and also on Apple, Spotify, and Google Podcast. Again, if you have any friends or family that want unbiased news, tell them to catch my way at Dave's Daily Crypto Take. Other than that, I hope all of you guys have a great crypto day, and I'll see you guys in the next one. Peace.